Well, the markets seem to be taking the ECB stress test results cautiously positively, I would say. Markets up a touch. Some interesting stock-specific moves this morning. Lloyd's down 2%. The market perhaps worried that the bank came perilously close to failing the stress test under the adverse scenario. And Commerzbank up 9% this morning. Conversely, I think relief that they passed the test at all. So yeah, so you can spot some specific stuff, but generally I think of generally muted market reaction. Well, only time will tell, really. I mean, first of all, European banks have to be confident in lending to each other through the interbank market. At the moment, anything beyond spot is very, very illiquid. There's not a great deal of trade going on. And if European banks aren't confident in trading cash with each other, then why should we be confident in dealing with the banks, and why should banks be confident in lending to the real economy? So that's the first thing that we really want to be looking for. Ultimately, we need to see cost of capital for the banks coming down further, and we need to see that reduction in the cost of capital being passed on to borrowers, and that's the only way we're actually going to see economic recovery in the Eurozone, which of course has been foundering in recent quarters. Well, I think a pro-European majority was largely expected, and you're seeing a relatively muted market reaction this morning on the Ukrainian currency, which I would say is probably the best real-time indicator of market sentiment. Having said that, it's clearly a positive move that there seems to be a workable majority in the Ukrainian parliament going forward. Of course, the $64,000 question is this an administration with whom Putin sees as credible, as legitimate, and is willing to talk business with? I'm not entirely sure that's going to be the case.